Last week, mortgage rates dropped to the lowest they've been all year long yet again. And in last week's video, we discussed why, even though inflation came in hotter than expected, the underlying data suggests that the PCE report that will be coming out next week, which is the report the Fed cares about more, will actually be softer than expected, which caused rates to continue declining this week. Nationally, overall inventory increased this week, but both new listings and the number of people applying for mortgages declined. Collin County had another big jump in pending sales, and actually they have just as many homes pending today as they did 9 weeks from now last year, if that makes sense. Basically, their pending sales volume is 9 weeks ahead of where it was last year. And both Dallas and Collin County are showing obvious signs of heating up, right on time as we're just about to enter March and begin the spring market. We'll be covering all this and much more in this week's market update. My name is Michael. I'm a real estate agent here in the Dallas area, and every Monday I give you a weekly update covering all of Dallas and Collin counties as well as the national market. We're looking for trends, we're tracking mortgage rates as well as mortgage purchase applications, as that's our best leading indicator to what demand will look like 30 to 90 days from now. We'll be looking at things like median list price, days on market, how many homes are having price decreases, what's inventory looking like, and if you stick around until the end, it's my favorite part, the top 10 ranked hottest and coolest cities and zip codes in all of Dallas and Collin counties. If this sounds like something you're into, make sure and hit the subscribe button. And if you're looking to buy, sell, or invest in the Dallas-Fort Worth area, whether it's next week or next year, I'd love to connect. I've helped every one of these yellow dots find their little piece of Texas, and I'd love to help you too. Just call, text, or shoot me an email. All of that is in the description below. Okay, today is February 24th. Let's see what the data is telling us, and if this is an old video, you can click the playlist here to get to the latest weekly market update. Okay, we usually start with market news. This week is kind of more of an opinion, but I wanted to take a minute to explore what the potential impact of Elon Musk's Doge and laying off of government employees could have on mortgage rates. Now, the data around this is not clear at all. There seems to be a lot of conflicting or at least very vague information, but more or less, here's kind of what we know. There are over 3 million government employees, which accounts for about 1.9% of the US labor force, excluding military. The White House offered a deferred resignation to more than 2 million of those 3 million federal employees, which basically gives them the opportunity to voluntarily leave their jobs in exchange for a buyout, which from what I read, would have been 8 months' pay. And apparently by February 12th, about 75,000 federal employees had accepted that offer. And then we have what's called probationary employees. These are employees who have been employed for a year or less. And apparently the administration ordered agencies to lay off nearly all probationary workers, which would have been about 220,000 employees as of March 2024, so about a year ago. We don't have the data for now, but even if you were to estimate that they were similar, then that number would have been 220,000 employees. But even beyond the immediate potential job cuts, you've also got to consider the spending cuts that later on are going to impact employment. A few that I found are there has been a $900 million cut to the Institute of Education Services, which apparently tracks the progress of American students. And then, as you probably heard, Trump also ordered a 90-day pause on most foreign assistance spending, which of course has led to layoffs in US aid. They also announced a freeze on federal grants and loans, which apparently could affect trillions of dollars and, quote, cause widespread disruption in healthcare research, education programs, and other initiatives. And there's a lot of this type of news out there right now. I won't bore you with every little detail. A lot of them are like 1,500 jobs cut here, 2,000 jobs cut here. But basically, there's going to be job cuts. Doesn't seem like we can tell how big they're going to be. And then there will be spending cuts, which again will lead to more job cuts, but we have no idea how much yet. And then depending on which news source you look at, either 10,000, 30,000, or 94,000 employees have been laid off so far, including those who took the deferred resignation. Now, what does any of this have to do with mortgage rates? As you know, because we talk about it every single week, the only thing keeping mortgage rates from dropping right now is that the economy is just too strong. The labor market is too strong. Unemployment is too low, so there are just too many people employed making too much money, leaving the fear of inflation ramping up again. So until that changes and the labor market softens, mortgage rates aren't going to get much lower than this. So if there do truly end up being mass government layoffs, we're going to see it first in the initial jobless claims that we usually track. And then for those who aren't able to find new jobs quickly, we could potentially see a sharp rise in unemployment, which would then signal to the bond market that the Fed is going to cut rates. This would make the 10-year drop, which in turn would make mortgage rates drop. And that's how these government job cuts could affect you if you're hoping to buy a house. So as of now, there's not a ton to know. There are too many ifs to really rely on this, but if there do actually end up being as many job cuts as the media is making it sound, this can actually be one very realistic path to lower mortgage rates. As of now, I just want to put it on your radar. Now we're moving on to the actual data, starting with national housing inventory. This week we had an increase of 2,230 more homes for sale in the country. This keeps us at 29% more inventory than we had last year and gets us to a total of 640,221 homes available for sale in the country. This same week last year, inventory was at 497,000 down here, 497,657. So way better than last year. Then for reference, the all-time inventory bottom of 2022 down here, we only had 240,000 homes for sale. The peak of last year, we had 740,000 homes for sale, and this same week in 2015, for reference, we had about 958,000 homes for sale. Then looking at new listings, you can see this dark red line is this year. We had a pretty big drop, almost to where we were 2 weeks ago. So this week we have 2,698 less new listings than we did this week last year. We're down to a total of 53,861 new listings. As you can see, it doesn't seem like there was a decline in the previous years on this week, so I'm not sure what happened, but as always, that's 1 week data. It does look like we should see a jump next week, at least in the 2 previous years we did have that. So we did have Monday as a holiday, but for me, that doesn't, little holidays like that, I still list on a Monday in that case, but maybe some people don't think that way and that's why we see this spike here. I don't know. But next week we should see a spike, so don't think anything of this. Still, overall, it's good news that we are above every year, even though just slightly above last year. Overall, new listings have been doing much better this year, and that's great news because it means you're gonna have more inventory to choose from and less chances of prices running up quickly when rates finally do drop again. Now, looking at pending sales, this week we have 4% fewer pending homes than we did last year nationally. Of course, in Dallas and Collin counties, we still have way more pending sales because we are the #1 fastest growing metro in the country. But nationally, sales are down 4%. And that, of course, is because mortgage rates have been up at 7% most of the year. But just know the number of pending sales will continue up until around June. And this week we have 312,742 homes pending, which is about 9,000 more than we had last week. The last thing we cover nationally is the percentage of homes having price decreases. Every year it's normal for a third of homes to take a price cut before selling. Looking at the national chart here, we remained again pretty much flat for a lot of weeks now, just about at 33% of homes taking a price cut this week. And as you can see, last year this number didn't start going up for a couple more weeks. And you can see these slopes all really begin at different times, but if you look at the last 2 years, the peak ended up really close to the same. So the peak of last year, we got as high as 39.9%, but the year before, we got as high as 39.2%. So don't think just because this starts out higher or if it starts sloping higher, it doesn't mean we have to end up with a higher percentage down the road. But all you really need to know here is if you do want prices to come down, this number does need to be going up. And so far, we're just going flat. Okay, moving on to mortgage rates. If you'll remember, after the inflation data came out, we ended up at a 6.96, which was the lowest. Then we opened up on Monday at a 7.02, and then we dropped on Friday all the way down to a 6.89, which now is the lowest that we've been all year. And we are now 0.25% lower than where mortgage rates were a year ago. They were at 7.14 right now last year. Now they're at a 6.89. So it may not feel like things are improving, but they're actually about 0.25% better. And then looking at the mortgage purchase application index, this tracks the number of people applying for mortgages. Obviously, we knew we were gonna have drops. We're gonna have another one next week. I think this is because people are preparing their taxes and then waiting for their tax returns. A lot of people use those for down payments. So this week, we saw a 6% decrease in the number of people applying. However, we're still 7% above where we were a year ago. So we still have more demand now, but I've been saying it for more than a year now. I still believe it. There's no reason to believe mortgage demand is going to grow significantly until rates get at or below 6% for a sustained period of time. The evidence we have for that is new construction has been offering lower than 6%, and they've been selling way better than pre-existing homes. So if rates stay around where they are now, you can expect something probably right in the middle of these two for the rest of the year. No significant changes in demand until rates get around or below 6%. Okay, now we're moving on to the local markets, starting with the MLS data of Dallas County. Starting with new listings, this week we had 504 new listings, which is 21 less than last week. So 2 weeks in a row of decline as far as new listings. Again, nationally, we also had a decline in new listings this week. Number of closings is down 52. Of course, that relates to data 30 days ago, as that's when this home would have contracted, down to 227 closings this week. And that actually probably is impacted by the holiday week, since there was one less day to do business with title companies. There were 43 immediate sales, meaning these closings which contracted within the first week. That's 9 less than the previous week. We had 312 new contracts, which is up 30 from last week. And then in total, there are 2,174 homes either under contract or pending, and that's 109 more than last week. Then moving on to Collin County, we had 307 new listings, so an even bigger drop in Collin County. That's 86 less than last week. 193 closings, only down 8. Of those immediate sales, meaning they contracted within the first week, there was an increase of 7 up to 40. The number of new contracts this week, 206, that's an increase of 25. And in total, the number of homes either under contract or pending increased by 100 up to 1,862 homes. So in both counties, we saw a decrease in the number of new listings and an increase in the number of contracts, which is what you would expect to see coming into the spring market, which will be starting very soon. Okay, moving on to the Market Action Index, starting with Dallas County. If you've never seen it, it takes into account all this data, puts it into one easy to read graphic with a number. Anything at 30 or below is a buyer's market. Above that, we're asking how much of a seller's market are we in. Currently, we are at a 38 slight seller's advantage in Dallas County. All we use this data for is to try and see ahead of time, is anything looking unusual or are things looking normal? Median list price has still been holding flat since basically December 20th. Very little fluctuations in there. However, median price of new listings has slowly been trending up, has not broken out of any of these peaks yet, but you can tell things are trying to heat up there price-wise. Average days on market has been pretty steady. Median days, though, did have a drop back down to 70. Again, we're just seeing small evidence that things are heating up more than the winter market, which is exactly what should be happening now. Inventory actually saw a small decrease this week, same as nationally, and the Market Action Index, as you can see, has been heating up basically since November. Now, that is a little unusual, and this week it was mostly flat, but yeah, things in Dallas County at least started heating up a little earlier. That's not yet been reflected in price, at least not in the overall median list price, but you expect that to change soon, just given all these indicators that things are starting to heat up, including the Market Action Index. And it just makes perfect sense as we are almost into March now. Then moving on, same thing, but for Collin County. If you'll remember last week, we still had not found a bottom for prices. We were hopeful that it was going to be this week, and it potentially could have been. As you see, we went from about 525 up to 529. So Collin County took a much longer time finding its bottom price. And even the Market Action Index, you can see it has started curving up quickly. And in fact, it's higher. Yeah, this is the highest it's been on this whole chart, which is from November 8th. So finally, we see some signs of life in their Market Action Index. We see signs of life in the median price of new listings. It's about back to the top of that range. It's not broken out yet, but I would say it's very likely that we have seen the bottom right here for prices in Collin County this year. I think that would be very likely. And then of course, they are at 36, which is a slight seller's advantage, not quite as hot as Dallas County, but their median days on market has been dropping quicker. They're all the way down to 63. Their average as well keeps trending down. Their inventory totally flat for many, many weeks. So yeah, everything looks normal. Collin County was a little slower than Dallas going through the winter. Both of them are now, Market Action Indexes are heating up, and all of this looks totally normal coming into March. Very quickly, taking a look at pending sales in Dallas County, I just want to show you we have more pending sales than we did last year, and I would expect that to continue for most of the year as we keep growing and growing our population. But Collin County is the one where I wanted to show you. Look at this, 1,690 homes. That is the equivalent to over here, somewhere between these 2 weeks, which this one right here, 1,626 homes, that's already 9 weeks ahead of where we are right now. So pending volume in Collin County, of course, you can see it jumps big every year as it's the #2 fastest growing county in the entire country. But it's very obvious that this year pending sales are growing much faster than either the previous 2 years. You can see the spread between these two is much smaller than this huge spread. So again, things are heating up in Collin County as well. Now we're moving on to the top 10 ranked hottest and coolest cities and zip codes in all of Dallas and Collin counties. These are ranked using that same Market Action Index number we've been talking about. Starting with the absolute hottest cities, the #1 hottest remains and has been for a very long time, Carrollton, Texas at a 47.35. And remember, 30 or below is a buyer's market, so 47 is pretty hot. Then Coppell heats up 2 spots, Louisville heats up 1, Plano cools off 1, Richardson remains, Grand Prairie heats up 1, Grapevine cools off 1, Irving heats up 2, Allen remains, and Princeton jumps onto the list at number 10, and then Balch Springs, which was number 8 last week, cooled off entirely off the list. Then we like to zoom into the specific zip codes, and Plano 75093 is all the way up to a 50.69, so that's pretty hot. Followed by Carrollton 75007, then Grand Prairie 75052, Plano 75025, Louisville 75077, Carrollton 75006, Richardson 75080, Coppell 75019, Grand Prairie 75051, Dallas 75234. So if you got a home in one of these zip codes, you should be able to sell for top dollar. Again, that's a 45 all the way up to almost a 51. Then we're moving on, the same thing, but the coolest cities and zip codes. The absolute coolest remains and usually is Blue Ridge, Texas at a 28.21. Then Sunnyvale remains number 2. Van Alstyne cools off 1. Lavon heats up 1. Then Leonard, Royce City, Rockwall, and Salina all remain in their same spots. And remember, anything above Lavon here, these are the buyers markets that remain. There are 4 of them currently. And then Nevada cools off 1 to number 9, and Red Oak jumps onto the list at number 10, and then Anna, which was number 9 last week, heated up off the coolest cities list. Then zooming into the zip codes, the absolute coolest is Blue Ridge 75424, followed by Grand Prairie 75054, Sunnyvale 75182, Van Alstyne 75495, Lavon 75166, Rockwall 75032, Leonard 75452, Royce City 75189, Duncanville 75116, and Salina 75009. As always, if you're looking to buy, sell, or invest here in the Dallas-Fort Worth area, whether it's next week or next year, I'd love to connect. Call, text, or shoot me an email. All that is in the description below. Thank you for watching. I'll see you in the next video.